Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Today I'm going to show you how I put this report out on the day. The market was just about near the low, and I sent this out. If you're not on our list, get our free chart of the week. Go to the site and sign up for it. I sent this letter out. Stock market crash, tradable low isn't far off. It was minutes off. Maybe a half hour. You can see what I read there, that the stock market low isn't far off. We're starting to see the type of numbers in our market internal gauges that have signaled a tradable low is not far off. We warned subscribers before this was happening what to be looking for. And you can subscribe to our Market Edge letter, and you can go there and you can read the rest of what I had said at that time. And I'm sure you'll find it really interesting, and you could read some of the other articles that are there. And you can read about the breakout bar failure, something I've taught traders for a long time, market volatility. We've got education on option trading and such, and strategies, and a lot of great information there that you can read for free and learn a lot about how we do things at Master Trader with market timing and technical analysis and picking which options to trade for income and directionals and so on and so forth. Okay, so I wrote that article. Here's the chart of the E-mini futures for the NASDAQ when it was right around down here. I posted that article. If you're a subscriber, you know that it was in your inbox right around this time. And we had this nice move up where I'm thinking now we're probably going to have a little rest for a few days, maybe get a pullback. You can see the NASDAQ futures are up against their declining 20 MA here. And that's a one reference point, but maybe it gets a bit higher. It's rolling over a little here pre-market. The next reference point is right up here at 68.13. That's this peak here. Notice we don't need any Fibonacci lines or trend lines or anything of the such to determine where support and resistance is. I just always tell traders and investors, look to the left. Don't put the stupid squiggly lines on your charts and start connecting dots from one point to another and fib extensions and all of that nonsense. Just look to the left and see where the resistance is, where the prior turning point was, where people took their money out of a market or a stock or put their money back into it. It's that simple, right? We keep things simple here. Now, what was I seeing on that day to say we're seeing the kind of numbers for a low? Well, at the time, I saw option traders start loading up on put options. And when they do that and volatility is spiking to an extreme, odds are you're close to a tradable low. There's rampant fear, and option traders are going to the options market trying to buy protection. And they're doing that after the market already fell a tremendous amount. So when people do the most stupid things at the most stupid time, odds are in the stock market when they do this, you're near a tradable low. And we've done that for years. And we mark or look at what sentiment is from a little bit of a longer term perspective, and they're still looking for this market to go lower, and it might in the short term, but I'll tell you more about that tomorrow. Our breath here is coming up into an area where it may turn back down again. We'll see in the next couple of days, and we'll take a look at that. So we look at our market internals as well as our technical patterns to see what's happening. And the S&P futures at that day were retesting a prior low. This is where it all started with the breakout bar failure. I said you could read about that in the chart of the week. While I'm speaking here, don't forget to subscribe to the channel, hit the bell so you get alerts when they come up. Right. So things are moving up here a bit. There was some wider range bars yesterday as traders got a bit excited as prices started to push up and Apple started to come in and participate in the party. Wider range bar up into some resistance right here. So we'd expect that to stall. It's actually up here about 2 points. So you got to be careful today of what we call a gap and crap scenario. And that happens when you have prices up 3 or more days in a row, and then they're gapping up into an area of resistance. Odds are there's going to be sellers. Think about it. If you had read my article down here on the 9th, and you bought Apple, and you held it for 3 days, and today it's gapping up $2, would you be inclined to sell it and take your money? So there's a lot of psychology behind patterns. It's not just this candlestick is called this name or that name and such. Think about technical analysis in a way of what does the chart communicate about what others are thinking. And your insight as to what is the probability of what's happening or what will happen will increase tremendously. And when you combine that with multiple time frames, relative strength and weakness, what the broader markets are doing in market internals and intermarket analysis like we do for our subscribers, the odds are overwhelmingly in your side. A few other things moving here this morning. Goldman Sachs is up a couple of points. So what's moving is moving up more or gapping up pre-market. You want to be careful here this morning with this gap up. Okay, you have been warned. I like the fact that these option traders continue to step up here and bet that this market's going to go down. So if it does pull back the next couple of days, I think we're likely to see another buying opportunity. So good luck, everyone. We will talk again later in the week.